Good morning. Today is Wednesday, January the 17th. The time right now is 3 minutes past 11 in the morning, and overnight market remains very, very quiet ahead of tonight's retail sales number from the United States. And this is the highlight for the week, other than Friday's Michigan Consumer Sentiment Index. So as far as US is concerned, it's going to be a data-like week, all waiting for tonight's retail sales. Market is expecting a slight improvement from 0.3% in November to 0.4% for the month of December. So retail sales has been basically quite flattish in my opinion, and any kind of bump up would suggest that US economy remains stable. However, there is no high growth prospect if you look at the retail sales number. So this will be a additional data to look at before the Fed decides whether it is time to cut interest rates. Based on what we saw last week when we have the release of the CPI numbers as well as the PPI numbers, both set of numbers actually contradict each other, whereas the CPI came in hotter than expected and the PPI came in cooler than expected. So basically they cancel each other out. So there is no real data to support either for the case for to cut or not to cut. So basically, I think the Fed will be holding interest rate unchanged at the current 5.5%. So in terms of equity market, you can see equity has been basically quite flattish, although there have been attempts to trade higher. We can see in the Dow Jones, where which is what you're seeing right now in the 4 hours time frame. Last Friday, we have a marginal high at 37,825.27 in the cash index. And yesterday, we have a bit of a pullback on the back of lower than expected bank earnings, because we are right now in the middle of earnings season, and the financials are reporting the numbers, and the banks are coming in worse than expected. So it basically took down the equity markets overnight. So again, the market, technically speaking, may possibly see further pullback. Let's see what happens, because the nearest level of demand is actually concentrated at about 36,500 to 36,600 levels. We can see that there is this bar here that is very, very strong, indicating there was a massive imbalance of demand and supply, and the origin of the move starts from here. So if the market can drift back into this range of prices, there could be prospects of market holding out. So let's watch out for this. And in the S&P 500, the high traded last Friday was 4,802.4, and this is just a touch away from the all-time high traded on January the 4th, 2022, and that level is 4,818.62. The high of 4,802.4 is less than 0.5% away from the all-time high. So there is the possibility the market may gun for that. We can see the tech stocks are remaining the favored one. So basically the S&P 500 has a lot of those tech stocks listed both in the Nasdaq Composite as well as in the S&P 500. So we can see the prices are a little bit strong, and if the market do drift back, I won't be surprised. And I think that very similar to the Dow Jones, I think the area of demand possibly is going to be about 4,643 to 4,655 levels. Again, this is where the market actually have a massive run out in prices, signaling an imbalance in demand and supply, and the origin starts from here. So if a market drift back into this area, it is basically a level of support. And over in the Nasdaq 100, we can see Nasdaq has not been able to go new high for the year so far. Last year high in December 28 was at 16,969.17. The highest traded on Friday was at 16,900. So we are just a touch away from that, and the price remains very, very stable. And if we do see a pullback, ideally in the form of a three-wave, that should be targeting the November close somewhere around the 16,000 levels. So do look out for some kind of pullback if there is. And over in Asia, we can see that the Nikkei this morning has a run up in prices, but it was quickly beaten back. We can see that the high traded is at 36,240 in the futures contract, and this is immediately being sold off, and this is again a new 34-year high. So we can see that in Nikkei, prices remains elevated, although there was an attempt to pull back, and it was largely erased by this morning run up in prices. But this again has been sold back down to where the market pre-opening price. So in the Hang Seng, we can see that the prospect of a bounce did not quite happen as I suspect. previously, when the market was around the 15, just under 16,000, I thought the market would actually have a good case of be able to hold up, and I was calling for possibly a bottom fishing here, but apparently it did not work out. Yesterday, the market went down, and this morning it went down even lower. Now, this is the price where I think it will get very sensitive. 15,219 to 15,584 is the last level of support. So if the market can hold out here and accompanied by a reversal pattern, that could be the signal to go back into buy again, because the Hang Seng has been falling for ages, and this is largely on the back of the disappointment where the People's Republic Bank of China, which is the central bank, failed to ease interest rates, and that was what the market expected. It did not happen, and the market went down. But again, this morning, China reported the GDP at 5.2%, which is very, very good. Okay, now compare that to US Q3 GDP of 4.9. So 5.2 is actually a good number. So however, we have not seen any reaction so far. Hopefully there will be one later on in the afternoon, and that should be basically supportive of markets going forward. And over in currencies, we can see that the dollar managed to rally, and now it has gone back up above 102.83, which is last year's, so at the beginning of the year, we have this high at 102.83. Now the prices have extended higher. I was hoping for a pullback first before the market rally, but since the market has already rallied, target remains firmly at 104 to 104.44. So look out for extended rally in a three-legged move towards the 104.22 to 104.44 high. Okay, and this is building up to be a perhaps a trade opportunity on the short side, because the dollar movement is basically largely down if you look at last year's price action. Over in the euro dollar, we can see euro dollar, instead of going up higher to 110.15 to 110.40, which I was hoping to sell, but the market did not do that. The market actually went down, and very much in line with what you're seeing in the dollar index. The dollar has strengthened, so the other principal currency are pulling back. So this morning low is at about 108.70. So we can see that there's a bit of a support, because this area here, 108.65 to 109, does appear to be a level of support previously. And let's see what happens. If the market cannot hold and go down, the next level to hold up will be about 107 level, and this will be a better level to go long, okay? Because I still believe the dollar is going to come back down eventually, especially if the talks about cutting interest rates actually pans out. So over in sterling, sterling is now retesting the 126.10 level again. So you can see this morning, we can see prices went up to as low as 126.19. Now you can see that notice 4 times in the most recent past, we can see the market has been holding up very well at 126.10, 126.11 before the market kick higher. So there's a good prospect that the market may actually be able to hold up. On the other hand, because there are so many buying positions here, there is the possibility of short-term liquidity hunt below 126.10. So meaning to say that people who have been buying will logically put their stop just below 126.10 level, and that could actually create a pool of liquidity for stop hunting operations. So both can actually pans up. So, but for now, I think my buy is still to the upside, hoping for a market to take out 128.27. Over in the Aussie, we can see Aussie managed is still falling as we are speaking. This morning, we can see prices continue to drop, and the lowest trader is just hovering at around 0.66. So we can see prices may continue to go lower to test the 0.6520 to 0.65 half levels, and this is where I think, I suspect, buying interest may actually re-emerge. Dollar Canadian is very, very strong, and again, very similar to the dollar index. There was hardly any pullback. The market is continuing to trade higher. Based on what we can see, if the momentum can carry through, there's a good prospect market to test the 136 level. So look out for a run up to 136. But again, very, very similar to dollar index. I am a little bit bearish on the dollar because of all these interest rate cut talks. And over in dollar yen, now dollar yen had done very well at 147.33 right now, and this is actually testing the upper end of an area which I believe the seller may actually re-emerge. The highest traded so far this morning is 147.48, and this is very much in line with this bracket of prices between 146.80 to 147.5. So let's see if the market can actually be kept around here. And all that's missing right now is a sell signal on the lower time frame, ideally in the 1 hour time frame. And if you see one, I think that will be a good assumption that the market may have already peaked, and for the market to come back down to test the 134.70. Okay. And when we look at the precious metal, we can see precious metals remains largely sideways. We have a rally attempt from $2,013 to $2,062 before it sold back down yesterday to $2,024.30, and it's still holding currently about $2,028. By and large, I think the case for buying is actually still very much in play. So I would still favor the upside with a challenge of $2,081.70 to $2,090 for the start. So if this actually pans out to be something bigger, we could possibly see something along this line where the bottom here is at $1,973. If we do get a three-wave rally, we could possibly see prices back to $2,128, okay, if this actually pan out to be a larger degree three-wave, okay? Now, in the silver market, silver seems to have found a bottom at $22.46 and bounced up to $23.53 before pulling back this morning. Currently, it's just sitting around the October close, which is about $22.85. So let's see what happens here. But I think the market have a certain bias to the upside, so do watch out trading on the upside. And as far as oil is concerned, oil has not reacted negatively to the rising tension in the Middle East. We have seen the tension actually has spread. Okay, the risk of a more regional war is actually very, very high right now. Now with Iran directly attacking U.S. military bases in both Syria and Iraq, and that could actually expand the war front. And of course, we also knew that Israel is fighting not only in Gaza, they also have to contend with attacks from Hezbollah from the north. So we can see that that is also the case. And overnight, I have also read some unconfirmed reports that Egypt has also starting to amass their troops at the border with Israel. So that is also indication that we are probably going to see higher tension, and that is theoretically good for crude oil prices based on all this, because the area is a major oil producing area, and any kind of disruption to production could actually see prices rallying higher, much higher. So staying long is still my preferred option. I have already gone long, so I'm going to hold on to those positions for a while and see what and when the market will react. Over in Bitcoin, we can see Bitcoin pull back very, very sharply from the high at just under 49,000 all the way down to 41,500. And the market has bounced a little bit, but this bounce is very, very shallow. Even if we do get a more robust bounce, I think somewhere between the 50% pullback for 45,200 to 46,300, I think that will be a level that will be hard to overcome, especially within this area here at 45,560 to 46,300. I think that level again poses a level of supply. So if the market can go up there, ideally that would be, to me, a level to look for selling possibilities. So this is all I have for you. Now tonight we have retail sales, do watch out. And tonight I have live trading, okay? So for those who are interested, go and check out Everything Trading website, and for their registration link, participation is free. There's no charge on that. So if you can join me, that will be at 9 p.m. Singapore time. That happens every Tuesday and Wednesday. And today is Wednesday, so we will have one live trading session. Now next week I will not have one, because on Tuesday I have a live seminar in which I have to do some presentation to somebody in Singapore. So Tuesday we skip that, and we will resume again on Wednesday. Okay, bye-bye, take care.